to talk about innovation strategy and investment management. The topic ranges from ESG evolution to crypto tokens revolution. I'm here today with Maarten Ectors. Maarten is a multi-award winning senior executive who in the last decade has been setting up new innovative ventures and platforms using exponential technologies like cloud, blockchain, and AI. He's combining that with new business models to solve hard problems in the financial services, high-tech, and telecom industry. For companies like Legal & General, Nokia, Canonical, that's the company behind Ubuntu. Maarten is also an advisor to a Silicon Valley VC and their investments such as an enterprise blockchain company. Welcome, Maarten.
Thank you.
So, Maarten, ESG, which is environmental and social governance, is a hot topic in investment management at the same time as Bitcoin is in the news almost daily. Both are innovations. In our conversations, you've talked about the difference between evolutionary innovation and revolutionary innovation. Maybe you could start by talking about ESG and why innovators need to pay attention to it.
Yeah, so ESG was born from the United Nations. They asked financial services companies like, can you use your financial power to just do more than profit maximization and help to create that better world? Because climate change is impacting people's lives. Companies who do not care about it are likely to face future pushback from society. And ESG should help investors understand their money is being used to create a better and fairer world tomorrow. So customers do not want their investments to be invested into businesses that can be disrupted because climate, racism, or other scandals appear. As such, most customers understand why ESG is important and will request their investment manager for ESG investments. And that is when such an innovation happens that customers really understand it and they request it. We're talking about evolution because traditional companies are very good at listening to what their customers want and delivering that to them.
How's that going to impact companies? Like what makes it a critical evolutionary innovation?
So all the type of evolutionary innovations that like lead to red oceans are critical. And the red oceans, let's explore that in a second. But every time competitors try to become as efficient as possible, they reduce the price for their products until they at the end become a commodity. So at the end, profits go down every year, and you need new products to be launched to compensate for these falling profits of older products. And ESG here is a great example of such a new product that at the moment can command a lot higher margins than things like passive index-based investments. So what can happen now? Well, there's three possible scenarios. First possible scenario is a red ocean strategy. Over time, we come up with ways to measure ESG in a standardized way. It becomes very well understood. And all that premium pricing will make room for cutthroat competition. The end result of that will be that ESG products become business as usual and margins will be low. And new products are again needed to command that higher margin. And then we see a repetition of the cycle. We've seen a lot of this happen through decades of business. Sometimes, however, blue ocean strategy happens. There's an organization that comes up with a totally different strategy, which makes all the other strategies irrelevant. And it makes it hard to copy. And the end result is they command a very large part of the market. Examples of this in the past would be high frequency trading or passive index-based investments, because all the competitors were optimizing active investment or human-based investment, and as such, it took them time to react to those trends. Now, the third possible scenario is a revolution happens, a revolutionary innovation, and it's sometimes also referred as disruptive innovation comes along. And what happens then is that there's a paradigm shift and the market alters. And what is coming after Bitcoin, I think, could provoke such a shift.
Wow. So you've used Bitcoin as an example of a revolutionary innovation a few times. Maybe you can tell us why that's the case.
So Bitcoin has been around for almost a decade. And it's a crypto token, which is made possible by a distributed ledger called a blockchain. But the most important thing is most customers do not understand Bitcoin and have expressed absolutely no interest in it. So many financial services knew about Bitcoin, had R&D teams working on it for the last 2 to 4 years. But since there were security issues, performance issues, and most importantly, no customer interest, most of them have stopped any investment in Bitcoin some time ago. But then all of a sudden, Bitcoin rose very sharply in value, and our customers are fearing that like they might be missing out and they want Bitcoin. So that has provoked a difficult situation for investment managers because they weren't prepared. And this void has now been filled by, for instance, new players like Coinbase. And Coinbase has shot up in valuation. They're now valued at $77 billion for their IPO. And this would make them the 16th most valuable financial institution in market cap. So Bitcoin is a great example of disruptive innovation, which provokes a revolution because all of a sudden, customers that have told their investment managers for 5 years they do not want it. And this allowed new players to enter. And additionally, the technologies behind Bitcoin can disrupt lots of the existing areas of investment management. Very clear one would be, for instance, custodianship of assets. So when customers request innovation, it's evolution. But customers not wanting an innovation for many years, but overnight changing their mind, that provokes a revolution. And we're seeing this happen in many industries now. Take a look at, like, for instance, Tesla and customers not wanting electric vehicles some years ago. And this then leads to what's called the innovator's dilemma.
What is the innovator's dilemma, and why is it going to matter over the next couple of years?
So the innovator's dilemma happens when, like, certain technologies which are not understood, considered inadequate, or even completely inferior by customers for many years. And for instance, Bitcoin is a good example. It could only do 5 transactions per second. So it wasn't usable as a global banking payment system. So customers didn't see any reason why they wanted their bank to have an account in Bitcoin. But then all of a sudden, the price goes from $10,000 to $50,000. Musk puts $1.5 billion in Bitcoins. And now lots of customers want it. And they want to open accounts. But since traditional companies don't have it, they have no choice than to go to the new ones like Coinbase, Revolut, or eToro. So leaders in existing financial services companies now have a problem because most of them fired their Bitcoin and blockchain teams some time ago because there was just no market demand. But all of a sudden, they need to offer it because customers want it. So these leaders of these customers have listened to their customers, have done exactly what they asked, and they've asked questions like, should we invest R&D money in either ESG funds or Bitcoin investment tools? And they were told ESG, don't want Bitcoin. And now they feel misled by those customers because those customers made them do the wrong choice. And being able to recognize such an innovator's dilemma upfront and being able to solve it can make a world of difference. And Bitcoin is actually nothing compared to the disruption that decentralized finance, or DeFi, will bring, which is a more advanced version of Bitcoin.
So maybe explain a little bit more about what DeFi is then.
Yeah, so decentralized finance, or DeFi, let's not go too much into technical details, but there's 3 big concepts. There's tokens, there's smart contracts, and distributed ledger. A token is something of value. A Bitcoin is a token. But you could make a token that reflects another cryptocurrency or a regulated currency like the dollar or the gold price, or tokenize even a whole building or whatever. A vote could also be tokenized. So anything that represents value can be converted into one of these digital crypto tokens. Now, to do something with them, you need smart contracts. Smart contracts sort of like allow you to automate the business rules. So you could create new tokens, you can invest them automatically, you can destroy them when you no longer need them, or you can get external information like what's the gold price, so I update the value of my token. And then a distributed ledger makes it that like multiple parties or contracts cannot double spend a token, because otherwise it wouldn't be useful. So DeFi, or decentralized finance, refers to companies that are trying to disrupt the financial services system. And they do this by creating decentralized versions of a lot of the concepts in financial services we're all familiar with: loans, payments, investments, and so on. So DeFi companies tend to create these solutions based on smart contracts that need a new token to work. And this then gives value to that token. And that allows them to raise money via selling the tokens. And because they can raise this money by selling tokens, starting and growing a DeFi company is so much cheaper than creating, for instance, a digital bank and becoming a fintech. So DeFi companies hardly need VC funding compared to other startups. And afterwards, when they're scaling up, they have everything automated. They can sell tokens to others. And as such, with very few people, they can literally manage billions in assets. And that's the big disruption. To create a stock exchange, to create a bank, to create an insurance, DeFi companies only need a handful of people.
Well, can you give us a couple of examples of actual DeFi companies?
Yeah, so let's give you two decentralized insurers, Nexus Mutual and Bridge Mutual. They are very similar. And basically, neither of them hires employees to price risk or handle claims, which are sort of the core activities any insurer does. They ask their investors to put the tokens into escrow, and that's called technically staking. And then they give in exchange a vote they can use to price a risk or handle a claim. So how does that work, for instance, for a claim? If you vote with the majority, you get a commission. If you vote against the majority, so if you have a friend that like makes a claim and it's a false claim and you vote accept and everybody else says reject, then you not only don't get your commission, also part of the money you put in escrow, your stake, can be taken. And that's all done to avoid fraud. So this allows these decentralized insurance companies to Uberize and do everything an insurer does without hiring people. And this is just insurance. There's many types of DeFi companies handling exchanges, loans, payments, investments, creating their own indexes, and so on. And the market is literally exploding. Assets under management have grown with 4,000% since June last year. To put that in perspective, the internet was only growing at 1,000% a year in the 90s. So if future unicorns do not need VCs, they can live without an IPO on a stock exchange because they can sell their own tokens on exchanges. They can get loans there so they don't have to go to a traditional bank. Then you can see that banks, asset and wealth management can look totally different in the next decade.
Wow. So what should existing financial services companies be doing just to set up to even compete with this?
So existing companies have a core business. So let that core business run at, I would say, speed number one, which is digitize it. Make sure that all your existing products can be automatically sold, that custom operations are automated, and everything is as efficient as possible. Then speed number two would be for the growing parts of your business. So if you're doing ESG, which is a good example of a digital first offering, you should now go all out on new technologies like cloud with no code environments, mobile AI, and even smart contracts. And you should try to like become as automated as possible in ESG products. But then the third speed, that's the speed where you need to really go and have teams working on as well in parallel, which is future ventures. Future venture teams should create decentralized finance products, both for existing and new customers. Because if you don't know how it works, how can you compete with them? So future products should also be able to disrupt existing products. And that sounds perhaps strange, but like if your internal team can use those technologies and disrupt the existing business, that just means anybody can do it. And you probably rather have your own team owning the future than another team come in from externally and disrupting your business. So companies that want to work and be profitable in the future need to adapt to a world where disruptive technology changes happen all the time faster, and they need to be able to create future ventures with them.
Yeah, there's no question that the future of industry ecosystems is a dynamic and challenging conversation. Things are going to be fundamentally different in almost every industry, I think. Yeah, absolutely. Well, that's all really interesting, Maarten. Thank you. I learned a lot. So maybe to close, you could share some more general advice for CEOs and CIOs as they consider their next few years investment strategies for innovation, how to internalize this and think and do differently.
Yeah, so everybody's thinking about like, this quarter, big problem today, but like you sometimes need to take a step backwards and like look at all those large companies that are being disrupted every day faster. Go back to 2018 and like car manufacturers were like talking about Tesla not being a real competitor. We're only talking about 3 years ago. And today you have telecom operators that are saying 5G is the future and investing billions. And at the same time, you have companies like SpaceX and Starlink that will be able to connect 99% of the Earth, which is not a city, to high-speed broadband. So too few companies are really launching lots of new revenue generating ventures. And that's a really big worry because digital innovation is killing the established cash cows at a really alarming rate. So too many top executives are just focused on like not making small mistakes today and not enough on like things that can make the whole company relevant in 5 years. Because making a small mistake today is personal, and the issue of being irrelevant in 5 years is a collective mistake. And yeah, realistically, who knows where you will be in 5 years? And that's why I think we should combine things here. Why not expand ESG with an innovation index? Innovation index is a percentage of profit that comes from products that did not exist 5 years ago. Because do you really want your money to be invested into a company whose innovation index is very low? Because if they're not able to continuously renew where their profits come from, they're very exposed to revolutionary innovation. And they're proven not to be very adaptive. And as such, that would be my recommendation. Include an innovation index into any ESG product.
And just the whole concept of starting to think about an innovation index is, it is a little overwhelming, but critical for everyone. Wonderful. Well, thank you so much for your time today, Maarten. I've really enjoyed having the opportunity to think about some different things in a different way.